So today we are going to talk about interest rate cuts. There is projection that central banks in the US, UK, as well as India might cut rates this year. But the bigger question for us as investors is what happens when these huge banks cut their rates? Well, large central banks might cut down their rates by 35 basis points, which hasn't been seen in the market since the financial crisis. And this is one of the most dramatic rate cuts that is being expected for more than a decade. So, why this big change? Well, it looks like the inflation, which was the big concern that the central bankers had, is cooling down. The cost of goods, especially energy, is not shooting up like it was. Plus, all the strict policies that have been put in place to control the inflation and all of these cost concerns are now slowing down the economy and by a bit much, which is leading to lower wages and higher rents. So, in this video, we will cover the followings: the rate hikes that have been there in the developed and the emerging markets so far, the rate hikes that have happened in December 2023 itself, what do we expect in 2024, and about India's interest rate cut plan in 2024. Also, what happens to the India market when the US cuts down its rates? But before we begin, don't forget to hit the subscribe button and like and comment on this video. In 2023, the G10 central banks raised interest rates by a total of 1200 basis points or 38 times. This was actually much less in comparison to 2022 when there were 54 changes and a total of 2700 basis points of increase. Only Norway is the country which raised the rates in 2023 December, while the seven other central bankers from the group, which are managing the 10 different currencies, opted to maintain their rates. The emerging markets also saw a slowdown in rate hikes with a total of 575 basis points of hike in 2023 in comparison to 7,425 basis points in rate hike in 2022. In fact, countries like the Czech Republic, Brazil, Hungary, Colombia, and Chile, in fact, cut down their rates, leading to one of the most significant reduction in the last 3 years. In contrast, countries like Russia and Turkey raised their rates to fight the persistent inflation and the
In
currency.
December 2023, 8 out of the 10 central banks of the world's largest and most traded currencies saw rate setting meetings, with only Norway raising their interest rates by about 25 basis points. The remaining ones, like the England Central Bank, the Bank of Japan, the Federal Reserve, all of them maintained their interest rates, and India's RBI was also on the same page with making sure that the interest rates were unchanged. What we also saw was something interesting that happened in December. The US Fed took everyone by surprise, hinting at a softer stance on rates. The other central banks were more cautious and did not want to jump on the Fed's bandwagon, but the stock markets loved it. What we saw was that they were betting on more rate cuts happening and coming at a faster pace than what even the Fed was sort of expecting and hinting at the time. And this gave a nice little boost to global and Indian stocks in December. And we saw very strong rallies both at the beginning and towards the end of December, which kind of has spilled into the current new year as well. Now, here's the thing: with the global economy slowing down, inflation not looking so scary, job markets cooling off, central banks will have to cut rates. If they don't, they might tighten the economy a little bit too much by accident, and ultimately, nobody really wants that. Naturally, your next question here would be: are interest rates going to go down in the future, and what can we kind of expect from 2024 specifically? Well, yes, they are. That's the short and simple answer. The top forecasters are looking ahead and are seeing major rate cuts for most of the major world economies like the US, UK, Eurozone, Canada, India, not just in 2024, but also in 2025 and in 2026. But why? Well, this is the right time. Interest rates have been pretty high, which can kind of slow things down. So the plan ultimately is for central banks to sort of start easing off the rates gradually. It will not happen in an immediate sort of stance. Most economists agree that the rates at the end of this year will be higher than what they were at the end of, let's say, 2021, except for maybe China. And this pattern probably looks to continue towards the end of this year, but we will see rate cuts happening. But ultimately, don't expect rates to be super low. What will happen in an ideal scenario is that the central banks will ease the interest rates and drop them, not to sort of give a boost to the economy, but to sort of normalize them and ensure things are at the right level without giving any extra stimulus to the markets. And ultimately, it's all about maintaining that sort of balance between interest rates and how the stock markets are performing, how the economy is performing, what inflation is doing, and a lot of these very macroeconomic factors.
So now naturally your next question would be, how much can the interest rates be cut in 2024? Well, the expectations are that the large central banks like the US Fed, ECB, and the BOE could cut the rates by as much as 400 basis points by the end of 2024. There's a small problem that has up with the US. The US inflation has risen to 3.4% in December, which was unexpected as it was higher than the forecasted 3.2%. Many are expecting that this might push the Fed to delay the cutting of rates up to later in 2024 or even in 2025, which is leading to some amount of volatility that we're seeing in the India as well as the US markets. But despite this, the rate cut plan, in fact, might continue in the other countries in 2024 and 25. The emerging markets, which have traditionally cut their rates and reacted quicker than the developed markets, might in fact see big rate cuts on the table. Like we said, Hungary, Chile, and Colombia have already started cutting down the rates. Look at Peru. Peru has in fact chopped their policy rates down to 6.5%, and they might go as low as 4.75% soon. And Brazil is not far behind. If you want us to give you the rate forecasts of the top 10 countries in the world, please drop a comment in the comment section and we'll send you an article that talks about that.
Right now, the RBI is looking to reduce inflation, so don't expect any major interest rate drops anytime soon. The 2-year overnight index swap rate was at about 6.55%, so that kind of is hinting at the fact that maybe RBI may start easing rates around August or October of 2024. Experts are also very closely watching what's happening in the US markets, what's happening with the US bond yield rates, but Indian markets are unlikely to sort of face any major cuts until and unless the RBI sees a dip in the inflation and sort of hinting at their 4% goal that they're aiming at. There are higher expectations of more rate cuts in 2025, which kind of aligns with what we can expect from larger world economies as well. As for the size of the cuts, well, we're looking at a cautious maybe 50 to 75 basis points of a cut. That is 0.5 to 0.75%. The RBI also wants to keep a real positive rate for the economy. So with the current inflation, let's say at about 5%, the repo rate at 6.5%, there's about a 1.5% buffer between that. Some experts are also talking about maybe a more aggressive 100 basis point cut or 1% cut. So let's see what happens with that. But that's the broad range of rate cuts for the Indian market that we can expect. Why might interest rates go down in 2024? Well, there are a few reasons. Let's quickly go through them. The first is that inflation's cooling. RBI is expecting an average inflation for the 23-24 year to be about 5.4%, which is slightly above their 4% target, but it's ultimately heading in the right direction. And in the current new year that we're in, this number could sort of taper down to their 4% target as well. The second reason here is economic growth. India's economy is doing well. It's strong, and lowering rates could give it a nice boost as well. And finally, global trends. I think what we're seeing, as we've discussed in this video, the world's major economies might start easing a lot of their interest rates as early as the spring of 2024. And we are kind of already seeing China stepping in that direction already.
What would happen if the US cuts rates? If the US cuts rates, here's what could happen in India. Number one, a stronger rupee. More US dollars would flow in from the foreign investors, possibly boosting the Indian rupee. A strong rupee means that India pays less for the imports, like the vast amount of oil that we buy from the foreign nations. Number two, deficit cushioning. A buff rupee could help India reduce its current account and the fiscal deficits by making imports cheaper. Number three, inflation might shrink. With the lower import cost, especially for fuel, inflation would take a backseat, which is great news for everybody's wallet. And number four, economic growth. If the RBI follows suit and cuts rates, especially with the inflation nearing 4% levels in India, we could see a surge in domestic demand and economic growth. For Indian businesses also, it's a potential win-win. Number one, you see a foreign investment boom. Cheaper borrowing costs in developed markets could lead to more foreign investments in Indian markets, giving the businesses a much needed cash injection. Startups could thaw out. Indian startups have been in some sort of a funding squeeze. And with the fresh flow of investments from the global markets, startups could also thaw out. Number three, exporters versus importers. A stronger rupee might pinch the exporters' profits, but it could be a bonus for businesses which rely on imports. And for those who are planning to go outside and study abroad or travel, foreign loans and expenses could become cheaper. So that's the breakdown, folks. Lower rates in the US could spell good news for the Indian economy and the businesses. If you enjoyed this, please be sure to check out our other videos about the stock markets, investing, and the data driven methods in investing. You can also read our detailed blog for in depth information on this topic from our website. Links are all available in the description and the comments. And please don't forget to hit the like button, subscribe, and tap the notification bell so that more such educational content is out there to help you understand how macroeconomic events will impact the market as well as your portfolio. So see you the next time and happy investing.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Don't forget to